the markets, of course, have opened with significant cuts, and that was, of course, again expected given the turn of events in the Middle East. It looks like things over there are at a standstill for now, but I mean, the markets are certainly going to be on edge for the next few days, if not weeks, sir, isn't it?
Thank you, Suyash, and morning to all of you all. So, I think this was an event waiting to happen given the kind of news flows that we were getting from the Middle East, and especially after last year's 7th October attack by Hamas on Israel, and the developments we know all after about this. But the fact of the matter is also, Suyash, that this is not the first time that these kind of events have happened. We've seen last year Israel Hamas, before that, we've seen Ukraine and Russia. Now we are witnessing Iran and Israel. And possibly in the future, you might have some more events unfolding, which will have its own impact on the global markets, including ourselves. But I was referring to this situation yesterday when I was discussing with one of my friends. I asked him, he asked me the same question, and my one line answer to him was that, look, uh, brother, if we survived COVID-19, this is nothing. And the rest is in front of us. So this will also, we'll overcome this. It's a matter of time. Knee-jerk reactions are always great opportunity to buy, Suyash. And in terms of Q4 numbers, at least we have kicked off the Q4 number on a decent note. Last week, Friday post-market, we had Infosys, beg your pardon, TCS announced its numbers. And they were much better than what the street had estimated. And the understanding is that possibly you might have a better color and a shade on Q4 earnings for India corporate this time around, and that is likely to continue. So this correction, I think, is a great opportunity to buy.
All right, correction is a great opportunity to buy, and of course, we hope that better sense prevails. But so crude prices after that, initial knee-jerk reaction have receded. They are back around that $90 a barrel mark. That's on Brent crude. But again, Iran is the third largest OPEC producer, and the kind of rally we are seeing in crude prices, and this is not just because of supply side concerns, but also the demand from China is also expected to pick up, and economies are on the mend. Are we heading towards $100 a barrel mark very soon, sir? What's your sense of things?
Well, I hope not, to be very honest, because it's going to be a difficult situation for all emerging market economies which are dependent on import of crude, like India and China. Suyash, what I'm more worried about is the kind of activity that is happening at the high seas with the, maritime vessels, containers, tankers being hijacked or attacked. That is more of a problematic situation. Uh, with India, yes, Iran and US, I beg your pardon, Iran and Russia are crucial countries with respect to securing our global, a local energy requirement in form of petrol, diesel, LPG, kerosene, etc., etc. And the reason why it is more important, Suyash, is because with these two countries, we have rupee dominated trade and not dollar dominated trade. And I was reading a report last month up till March end, we imported 7% more of our energy requirement from Russia than the rest of the world where we have dollar dominated trade. So as far as we are securing our energy requirement from rupee dominated trade and discounted prices, $90 a barrel should not worry us. But in case if it has to go towards that $100 mark, then I think situation might get a little bit worse off till the time we have a decisive cool off on crude oil prices.
All right, so and you spoke of TCS's earnings. I mean, the numbers are largely in line. Revenue was a slight disappointment, but margins are at a 3-year high. Record deal wins for TCS as well, and the commentary is rather sounding optimistic as well. So, do you think we are at this pivotal point for our information technology companies, or do you think that TCS is a standout here, and some bit of pain will continue for other bellwethers like Wipro and Infosys, to name a couple?
We've been discussing IT for a long time. Suyash, even last week we did that, and I had very clearly said that uh, we are going in the earning season with the least or minimum expectation from the IT sector. If they deliver better in certain areas in terms of numbers delivery, well, it will go down well, and it has gone down well. Where there's the kind of surprise deal wins were something that has actually soothed the sentiments, because the view on the street was that it is going to take a while before the large deal starts coming in for the IT sector. And normally, Suyash, TCS is the stock which sets the background of earnings environment for the IT sector. And I hope the rest of the pack also delivers in terms of positivity on the numbers are concerned. And we've been positive for a long time when a lot of people on the streets were asking you to stay away from IT. We were of the opinion that difficult times are there for any sector, any company. It's not like these difficult times are not going to see the end of the road. And that's what exactly is visible. And our sense is that the new financial year that has kicked off 1st April 2024, you are going to see better color in terms of earnings visibility for IT sector, with both margins improving and deal wins.
Good morning, Gaurang. Now, difficult times, would they end for Vodafone Idea? We have prodded you on this subject before. Their follow-on public offer opens this week on the 18th. They are aiming to raise 18,000 crore through this route of the total of 45,000 crores they are aiming to raise through equity and debt. Now, their share is up today, almost 3%. Who do you think should buy the Vodafone Idea stock? It's very low price. Do you think it is good, at least for first-time investors?
My good friend, please tell me what is the debt on the balance sheet of Vodafone Idea balance sheet. I think it is 2 lakh crores. Correct me if I'm wrong.
2.5 around.
2.5. So you're not even borrowing 10% of that. And what are these 10,000, 15,000, 20,000 or 45,000 crores going to do when you have such a huge debt on the balance sheet? You are still living in 4G when we are talking about 5G and migrating onto 6G. You are losing subscriber base to the two large players like Bharti and Jio. And you have multiple issues. Honestly, Amit, I will not comment on buy, sell, hold on Vodafone, because we don't cover such stocks. We believe it is a waste of time. Unless we see some meaningful recovery on the fundamentals of the stock, we are going to keep ourselves away from it. And it is more of a trader's delight rather than an investor's fancy, to be very honest with you, Amit. And and let me give again blanket disclosure. We have coverage on Bharti Airtel and Reliance Industries, which holds the business of Geo Financial, Geo Telecom, Geo Mobility. And we are also of the opinion that possibly you are going to see a 10 to 15% hike in the tariffs over the next couple of months. Vodafone, well, if you want to go and commit suicide or you want to commit a hierarchy, I think, yeah, it's your choice. But if you are a sensible investor, better buy quality than quantity.
Gaurang, suicide and harakiri for Vodafone, but do you think then, according to you, this space is heading towards a duopoly with Airtel and Jio only, despite the fact that Vodafone has got some cushion with the government coming in?
So, to ask you on a humanitarian ground, Amit, I wish some things change for Vodafone. Because I mean, in a country like India, when you have such a huge subscriber base, and no country would want to have a duopoly, right? We had many players in this field, but then we know what happened, to those many players, from being overcrowded to now being just two large players, third player struggling to survive. And I hope there is enough competition so that the subscribers have a fair deal in terms of valuation and pricing. I honestly speaking, I would say that with the kind of growing number of hands which hold Android phones, which use data more than what they used to do pre-pandemic, post-pandemic, for you and me also, data usage has gone up, and we are paying a decently higher price than what we were paying earlier. So let's hope that this duopoly situation doesn't happen, and we have level playing field in terms of incumbents providing the service and for the subscriber to have a fair price.
All right, and before we let you go, sir, the going has been definitely good for our markets. We have seen corrections along the way, but buy on dips has certainly worked out. But I was looking at this one index, Nifty Next 50, that has actually outperformed most indices, even the small and the mid caps in 2024. The index is up close to about 17, 16, 17% in the year to date. I mean, do you think this is a pocket where one can look to invest at, as it offers, you know, the best of both worlds, stability of your larger bellwether companies and I mean growth opportunity of your smaller size firms, sir?
So next 50 is going to become the next big thing, Suyash. Uh, and possibly, I mean, see, if you were totally, low risk appetite, it has been always prudent to go with, benchmark, whether it is Nifty 50, whether it is Sensex, or whether it is, the next 50 stocks. Uh, you have relatively lower risk. At the same time, you get lower returns also. But you're not worried about choppiness, volatility, and if you want to play a little bit more safe and secure, then definitely you can go and invest over there. But remember one thing: there is nothing, safe. There is nothing secured, and there is nothing guaranteed in stock market.